Hello, everyone. We are so glad to be with you here at Lab Coat Agents. Wonderful real estate time with Mike Larino and our Lab Coat Agents, extended family and friends. My name is Nora Simpson. I'm the head of education for AssumeList. And we've got Mike Larino, the CEO and founder of AssumeList, and also the head of Fidelis Property Group, one of the most successful, busiest realtor groups in the Northern Virginia, DC, and Maryland market. Hello, Mike.
Hey, good afternoon, good morning, everybody. Thanks for joining us today on a Thursday afternoon, first week of September. Hope everybody had a wonderful Labor Day weekend. So we're super excited to talk to you, everybody, today. Obviously, our specialty is assumptions, and so we've got a lot of content, a lot of information to share in the next 30 minutes. Nora, why don't you kick it off and just kind of jump right into it? We are monitoring the comments, so if there's any questions along the way, we can certainly jump in and answer.
We love comments. We love audience participation. So if you have a question you want us to answer live on this stream, please put the letters QQQ before your question, and we will make sure to answer it. We've got moderators standing by who can help us. So we're so excited to share this topic with you today. The topic is get 3 homes under contract in 90 days with assumptions. Woo, woo! Oh my God, everybody's so excited. I can hear you screaming. I can hear you clapping. So I got a smile out of Mike. That's always exciting. Why do I know that if you get excited about assumptions and you become a subscriber to AssumeList and you really use all our tools, why do I know that you'll get 3 homes under contract in 90 days? I know it for several reasons. Number one, 75% of homeowners have an interest rate on their mortgage right now below 5%. We know this. This is fact. This is across the US. The second thing I know is that in a survey conducted by Discover Home Loans, this is a home loan branch of Discover Card, so I'm sure you've heard of these folks. They're a pretty big company. In a survey conducted by Discover Home Loans, 84% of homeowners who want to move said they were waiting for interest rates to drop before they moved. So interest rates are a huge influence on whether or not there is movement in our real estate markets across the US. Would you agree, Mike?
Absolutely agree. Yeah, interest rates right now are typically, not always, but more often than not, typically the number one reason why buyers are holding off from making their purchases.
And not just buyers, but homeowners who want to upsize or downsize.
Correct. So these are sellers, and everyone's familiar with the term rate lock at this point, right? So rate lock is the scenario in which a homeowner who's bought a home maybe within the last 3, 4, 5, 6 years, and they have a really great interest rate, oftentimes below 3%, who need to move, whether they need to upsize for a growing family or move across town or across country because of their interest in taking a new job, and just cannot move because they don't want to give up their 2.5 or 2.75% interest rate to buy a new home with a 6.5% interest rate. They are literally priced out of the price of the market and their ability to purchase or qualify for a new home, given the fact that where their current mortgage payment is. And so assumptions in general solve that problem, solve it for both buyers that are looking to buy a home just outright, and maybe they rent right now, or maybe they're first-time home buyers. And it also solves the problem for sellers, or homeowners, I should say, who need to sell or want to sell, but are reluctant to do so based on the fact that they aren't willing to give up their low interest rate to buy a home with a much higher rate and a much higher mortgage payment.
Absolutely. And Mike, if you want to share your screen, the thing that folks need to know about AssumeList is that it's not only a search platform that Mike built with all his genius. He's very humble, so it makes him uncomfortable when I tell you guys what a genius he is, but he's definitely a genius, just so you know.
Do you want to talk about the Learning Center? We can talk through the materials that we have available for agents to not only educate other agents, but also educate their own clients.
Absolutely.
In terms of how assumptions work. And then from there, we can dive into kind of key steps with things that we know agents can do today to grow their business and sell more real estate. I mean, I'll throw my hand up in the air. I am having a record year in production. My team is selling more homes this year than we've ever sold in our 16-year career, our 16-year history of our business. And that is primarily because about half of our business right now are for us helping buyers purchase homes with assumable mortgages.
Absolutely.
And let me say this statement, it should come as a no surprise to anybody, but I'll say it anyway, is there are no shortage of buyers seeking homes with low interest rate mortgages. So if you are, if your inventory or your pipeline isn't full of clients looking to purchase homes that literally are coming out of the woodwork begging to work with you to purchase a home, then there is something perhaps you could do different to help improve those, improve, the number of buyer rep agreements that you're signing, improve the number of people, leads coming into your funnel. Trust me, there is no shortage of clients out there or buyers out there, would be prospective clients out there who want to work with you if you can provide them with a solution to solve this interest rate challenge, right? And that's what my team does. Yep. And we cannot sign buyer agreements fast enough. We cannot sign seller listing agreements fast enough because sellers like, well, hey, if you can help me buy a home with a 2.5% interest rate, with a commensurate interest rate that I currently have,
that's right,
then I will gladly help you can sell my home with it. So now we have double-sided transactions. About half of our clients are double-sided transactions as well.
That's right. I would say about half of the folks who come to you for assumptions or come to us for assumptions also have a home to sell. Like that just is what it is because they need to upsize. They're having that third kid soon. Like there's just no other way other than using the assumption capacity to really be able to afford that upsize they're desperate for. So Mike, I have a request before we share the Learning Center. There's one thing I want to show folks, like one more little piece. It's the mortgage calculator. I want them to see what the mortgage calculator actually looks like. And there's a reason that I want them to see. So when we go on the AssumeList search platform and you can search for all these assumable homes and you can click on each one and see all of this wonderful assumable data that Mike and the dev team built algorithms to estimate, and they estimate them really, really close to accurately, like really close. When you see all that, there's also this mortgage calculator. And I want to show you guys this mortgage calculator for a couple of reasons. Number one, in that same survey I quoted earlier from Discover Home Loans, 84% of buyers or 84% of homeowners are waiting to move until interest rates drop. 66% of homeowners who want to move are waiting to move until interest rates drop below 5%. They actually said, 2/3 of them said, if interest rates can just go below 5%, they will move. They don't need a 2.5% mortgage. I think everybody knows 2.5% was like a magical time and it's not coming back, right? So Mike, would you just share the calculator so we can show folks that even if you find a home with, a 2.5 or 3% mortgage, that cash gap might be a little painful at first. It might look a little painful because coming up with the cash to help bridge the gap in equity can be a little overwhelming for folks at first. But we went out, Mike and I went out, and we recruited the lenders who offer the most competitive rates on second mortgages for assumptions in the U.S. And most of these mortgage calculations, most of these assumable homes are still available for a situation where the blended rate of their primary mortgage assumption and the secondary financing they have to get, the blended rate will still land them below 5%. That's going to satisfy 2/3 of those homeowners who want to move.
All right, very good. So let's do that. Let's jump right in. So let me share my screen. I will see if let's see if this works. Let me know if you can see my screen.
It's okay. I see it.
Very good. Awesome. Okay, so this is the AssumeList search platform, and what we're looking at here is Southern California. So I just ran a search for San Diego, and what we'll do is we'll just randomly, I just literally just typed in San Diego. These are I looked at single family homes in San Diego that are assumable and active status. So that's the only filter I applied. So basically, effectively all single family homes for sale. With a single family home in active status. And there are 310 homes on AssumeList right now that are assumable. All right. So this is a really powerful tool. And I just wanted to make sure that folks know that there are that many homes literally right now on the market for sale with an assumed mortgage, and all properties on AssumeList have an interest rate of under 5%.
And so, I just want to remind folks watching that This is only homes in active status that are single family homes. If you were to look at single family homes, townhouses, condos, and homes that are in other statuses, right, like coming soon or pending, you would actually see between 700 and 750. That's generally the number that we see in San Diego. Just in San Diego is between 700 and 750, 760 on any given day. So Mike has already narrowed it just to homes that are available, like that don't have contracts on them. But the fact is that the homes are changing all the time because homes go on the market and then they sell, and then more homes come on the market and then they sell. So it's an average of 700 to 750. But go ahead, Mike.
Great. So we have these properties here that just show up in the search results. I'm just going to pick one at random. This property here on Atisha Way in Lakeside, California. The home's been on the market for a day. It's a VA mortgage. It's got basically a sub, 2.25, 2.25% interest rate. Our platform does provide you with the interest rate. It's accurate to within 0.25% of the actual home's mortgage or interest rate on the mortgage. This home has 25 years remaining on the mortgage. So if you were to assume this, you're not purchasing a home, or the buyer is not purchasing a home with a 30-year mortgage. They're purchasing a home with a 25-year remaining mortgage. The loan balance is $500,000. We know the mortgage payment, and we know the cash gap, which is, and this, it's the difference between the list price for the home and the loan balance. So $340,000 is the cash gap. And then I'm going to just scroll down to the mortgage calculator, because this is what Nora was referring earlier to. So right now, we know with a 2.5% interest rate, the monthly mortgage payment is about $2,900 a month. If we, and it has a $340,000 cash gap. So let's just say, for example, you got a buyer that's interested in this property or any property that they find online. Like, well, heck, I don't have, $340,000 for the down payment or the cash gap. What are my solutions? What are the options? And so the number one challenge that we often hear from buyers seeking to do assumptions is the cash gaps have gotten too big. Well, that is no longer a problem. True, they can't purchase a home with 100% financing and do zero down, but as long as they have, in most cases, 10% down, which in this case is $84,000 on a $840,000 home, so 10% down, and then finance the rest through our preferred lender who specializes in assumptions for, or specializes in second mortgages specifically for assumable purchases. They're going to net a pretty substantial but very doable $255,000 second mortgage. This is what we call a purchase HELOC, home equity line of credit, that the lender is granting access to the equity at the time of settlement. So they're taking a HELOC out on the home they're buying. In this case, and in real time, the software, the AssumeList platform, provides the home buyer, or the agents helping the home buyer, with the calculation on what the exact second mortgage payment will be. Not only that, if you scroll back up to the top, we now also provide a blended interest rate. So this is the weighted average interest rate between the assumable mortgage, which they're purchasing, and the second mortgage, which they're taking out to cover the cash gap. And in this case, they're still come out $1,000 a month compared to taking out a new loan at current rates. So, and if you know, for example, that your buyer can get, say, a 6.5 or whatever interest rate on a new mortgage, you can plug in that exact interest rate and it will run that calculation for you in real time. Yeah. So even with a second mortgage, a pretty large second mortgage of $255,000, they're still saving close to $1,000 a month without having to come up with all of the cash needed for the cash gap. And they're still getting a sub 5% interest rate on an assumption. And of course, if they take out that second mortgage, there's no prepayment penalty. They can pay it off early. And then once that's paid off, they would still have they would still be left with that sub 3%, in this case, a 2.5% assumable mortgage.
So let's, I want to show folks, I just want to bring folks' attention to a few things here. So the first thing is that 4.7% blended rate. That is below the 5% that buyers and homeowners say they need. They need to go below 5% in order to make it make sense. And here you are. It's right here, 4.7, below 5%. Are you really sure that the Federal Reserve and the government and everybody else are going to find a way to get down below 5% between now and God knows when? I don't think they will. But here we are at 6.5 or 6.7%, and you can get them a 4.7% rate today. So that's the first thing you need to know.
Without having to come up with all the cash.
Right, without having to come up with all the cash. Secondly, they will save $1,000 a month on this, right? $1,000 a month in mortgage interest. That's life-changing. Now, I'm going to be honest with you guys. I used to think when I first started working with Mike and Bethany on AssumeList, I thought we'd be out of business by next year. I got to be honest with you, because the cash gaps are really painful, right? And the every month the cash gaps get bigger because every month folks pay down that mortgage, right? Every single month. So that beautiful 2.5 or 2.25% mortgage is getting smaller and smaller, and the amount that people are going to have to finance gets bigger and bigger. I will tell you, I talk to buyers across the country. They are willing to give me their firstborn child if I can save them $200 a month on mortgage interest. They really are. So
here's another home. I'm just randomly finding homes. This one is $875,000 in San Marcos, California. This is all still San Diego County. Sub 3% VA assumption with a $650,000 loan balance. So it's a much more modest $220,000 cash gap. If your buyer has that cash, great. You can roll, maybe they're selling a current home and they can roll the equity into the new home, and boom, they can just assume it with the down payment using funds they already have. If that's not the case, the numbers are actually much more compelling for this one. They're going to save over $1,200 a month with only a 10% down payment. So they have to come up with something. So we generally go 10%. There is an option. Our lender does provide up to 95% combined LTV, which means that the buyer only really needs a 5% down payment, and they can take out the rest through the assumption. But it's a much more compelling story, and the interest rates are much more, much lower for at least 10% down. And in this case, with the second mortgage, they're right at 4% combined or blended interest rate, right? So they're saving about $1,200 a month compared to taking out a new loan. I mean, this is really, really powerful when you think about a new home purchase today with interest rates over 6% for conventional mortgages, right about 6% plus or minus for new VA loans, and you get a buyer that can get a better than a 2% increase, 2.5% lower interest rate on an assumption, even if they don't have all the cash for the cash gap. So that's including the second mortgage. They're getting a 4%. In some cases, we can get sub 4% with a second mortgage. That is really, really powerful. And when you start having these conversations with your buyers and your sellers, you'll see very quickly how their eyes light up. They didn't know this was possible. How come I didn't know about this? Or can tell me more, right? And you'll find that as the word gets out and you start implementing these techniques and having these conversations, you'll see how quickly your phone starts ringing and how you'll find buyers that are truly, truly looking for support and helping them solve this problem. And Mike, in most cases, this is not something that buyers can figure out on their own. They Absolutely. Truly need an expert to walk them through the process and help them understand what lender can do this. If you call your local lender that you've worked with for years, chances are they don't offer purchase HELOCs.
Yeah, no.
And if they do, I would say, the small chance they do, I'm pretty certain they won't offer a purchase HELOC as compelling, as competitive as our lender partner.
Absolutely. So Mike, okay. So everybody who's listening to this, who's a real estate agent, there's very important things you need to hear. So the first thing is, tell me, you can just nod your head. I'll assume that I'll project. I'll assume that I can actually hear you and see you. Does it feel a little intimidating to imagine yourself talking about assumptions the way that the number one most educated, knowledgeable person about assumptions in the world just talked about them? Does it feel just a little intimidating to imagine yourself as a realtor making all these calls and saying everything Mike just said? If you are telling me no, it doesn't feel even a little bit intimidating, then I think you might be lying, just so you know. But that is why we created a brand new additional benefit for subscribers that is free to subscribers. All you have to do is be an active subscriber with AssumeList, and we will offer you this additional benefit. Are you ready to hear what the benefit is? The benefit is that you can schedule a webinar with me and you. So the way that I am with Mike right now, it would be you and me. So instead of Mike, it would be your face, right? And I know everything Mike just said, and I explain it all the time. In fact, I lead a free Q&A every day on our AssumeList Zoom every day. But this would be a webinar just for you and your clients. So if you're feeling a little overwhelmed about the notion that that you would call everyone you know and try to sound as knowledgeable and confident as Mike sounds, no worries. Because all you have to do once you become a subscriber is reach out to me, and you'll have my email and you'll have all my info within minutes of subscribing. All you have to do is reach out to me, and we will schedule a webinar for you, and you can record it. In fact, we can use my Zoom and I can record it and give you the recording, and you can use that to promote assumptions to your entire network. And Mike, is it okay if I tell them how you and I met?
Sure, go ahead. Why not?
So I taught the neuroscience of sales to real estate agents for 16 years. And originally, when Mike and Bethany, his beautiful, talented wife, when Mike and Bethany hired me, they hired me to help them, increase their sales for Fidelis Property Group. And before I met Mike and Bethany, I helped 200 real estate teams, and at least half of those teams, at least 100 of those teams, doubled their revenue within 6 to 12 months of working with me. So I have a lot of experience when it comes to helping people grow their real estate business. And long story short, the best reason I had for getting real estate people to reach out to their network before I met Mike and Bethany and before I found out about AssumeList was invite them to an event that has nothing to do with real estate. That was really the best thing I had. And once I found out about assumptions and AssumeList from Mike and Bethany, I went, oh my God, this is the most exciting news that any realtor has ever had to share with their network, right? Because if we want sales, we got to be in touch with people. There's very few sales you're going to get hiding under the covers. It just doesn't happen, right? So we took my favorite strategy from before AssumeList, and we combined it with my favorite strategy after AssumeList, and we created an event that you can put on for your network. And that event is a webinar with you, whoever you are, and me, head of education for AssumeList. And all you have to do is invite everyone you know to this webinar. And I promise you that you will see a huge uptick in your business if you do this. The other piece I want to say for folks is that if you're feeling a little intimidated by all of the information that assumptions seem to require, I'm going to tell you a little secret. You will feel confident and knowledgeable about this information within 2 weeks of consistently educating yourself. And I know this because every new staff member that we've brought on to, work for us and be part of the AssumeList family, every new staff member, when they first hear about assumptions, they're like, wow, this sounds so cool. And wow, it's a lot of new information. And I always say to them, well, okay, watch these videos. And Mike, feel free to share the Learning Center. Watch these videos on our Learning Center, read a couple of these fact sheets on our Learning Center, and come to our daily Q&A. Our daily Q&A is 8 o'clock Pacific, 11 a.m. Eastern, 5 days a week, Monday through Friday. And I'll give you an example of one of my favorite staff members that we have. His name is Joe Alvarado. He talks to a lot of our buyers and even a few of our agents. And when he first joined our team, he came to the Q&A every day, watched some videos, read some fact sheets. And after the first 3 or 4 Q&As, he would stay on after and say, oh my gosh, Nora, there's so much information. There's so much to learn. I'm so impressed. There's so much going on. Wow. Will I ever be able to talk about this the way you do? And I said, Joe, you'll get bored with me soon. Don't you worry. You're going to hear this information enough times. You're going to get bored. By his second week of listening in on those Q&As, he started to stay after and say, do I really have to come every day? Because he heard me say the same stuff every time.
So the theme here is not to get you to be bored with information. The theme here is that we really want to empower you to have the skills so that you can go out and have these conversations with your clients. And the reason why that's so important is because there's very, very few agents out there that can do the assumptions, the differences between the two, right? There's no way for us to cover this all in a 30-minute webinar. We would be here all day, and there's a lot to share. The point is that by educating yourself and coming to Nora's morning Q&As or signing up as a AssumeList subscriber, which is a measly $79 a month, to give you the edge to literally double your business in the next, I don't know, 90 days, 120 days, 180 days. Because like we said, there is no shortage of demand. It's not like there's nobody out there wanting to do this. There's every buyer out there. There is not a single buyer, zero, that don't want to save money by getting a lower interest rate. They just don't know how to go about it. They don't know who to contact. They don't understand the process. They don't know what the rules are. They need to work with a competent agent who can help them. And so the agents that invest in learning about this, and not every agent is interested in learning a new skill set. I get it. It's tough to learn something new. But those that are willing to take a week or two of their time and learn about assumptions really do have an edge in this market. And those agents are the ones that are literally seeing their businesses explode right now and are having a record year in production.
Yeah, 30 to 60 minutes a day for 2 weeks. Not even weekends, really. Just, spend 30 to 60 minutes learning about this stuff. Come to 2 or 3 of the Q&As each week for 2 weeks. You'll get bored fast. You'll hear me answer the same questions over and over. And you'll realize I could answer this question, right? You won't feel like you can answer that question on your first or second day, but I promise you by your third or fourth Q&A, you'll be like, all right, I get it. So
do we have any questions? We have about 2 or 3 minutes left. We certainly are willing to answer any questions. If you wanted to post anything in the comment section, we'll try to get to it. Is there anything else kind of key? We're going to be, you want to talk about, Nora, where we're going to be for the upcoming event in San Diego?
Absolutely. So on September 16th and 17th, Mike and I are going to be standing at the San Diego Association of Realtors booth at the big California Association of Realtors yearly convention.
The Reimagine convention at the Gaylord Hotel, right in Chula Vista on 15th and 16th of September. So we'll be out there. We'd love to meet anybody who's in California at the time.
You get to meet me in person, and I really do look and sound and move like a Muppet, but I'm also very short. That's something you don't know from Zoom.
Awesome.
So you'll see how short I am. And you'll see that I act like I'm always in a musical. What else? And then on September 18th, which is the day after the conference, Mike and I are going to lead a free training at SDAR headquarters. So it's free for all SDAR members, all San Diego Association of Realtors members. So we hope to see you there. And there is a link that I put into some chat somewhere that our LCA moderators will make sure. There it is. There's the link, and they're going to put it in the comments as well. So please register for that if you're an SDAR member, or if you're a California realtor and you think you're going to be coming to that event, come see us, or come, find a way to register for the SDAR training. What else, Mike? What else are you thinking about?
I think that's it. I mean, obviously, our goal today was just to provide you with a path, right? A path forward and how you can grow your business, secure 3 new contracts within the next 90 days. This is easy. This is easy stuff, right? There is, again, the buyers are out there. There's sellers out there. They are looking for somebody to guide them through the process. And so the agents that are investing in themselves and learning about assumptions really do have a leg up against every other agent out there, because they're able to offer something that very, very few agents can.
Absolutely.
And it's something that these people can't, these clients can't get elsewhere. They can't get this.
A lot of them don't know that this is an opportunity. Like, they have no clue. So, you could, for instance, call everyone and say, hey, I'm putting on a webinar about how people are getting, 4% mortgages in our market right now. Would you like to attend? Don't know if you're looking, but in case you're curious, or someone who might be curious, because a lot of the people who've resolved to themselves, right, who've said to themselves, I just can't afford to move, they're not calling you and saying, hey, my buddy, the real estate agent, I'm just letting you know I can't afford to move, right? They're not telling you that. They're just staying quiet. They're hiding under the covers. So if you reach out to them and you say, you probably haven't heard about this, but it's real, and I want you to come learn about it. There is a way to purchase a home today in today's market and end up with a 4% mortgage. So if you want to learn about that, come to my webinar, and I'll give you a few bullet points to disseminate. And if you want to ask me more questions before you sign up, I put a link in the studio chat. I'm not sure if that's the same as the comments, but it's homes.assumelist.com/learn. That's the link to register for our totally free Q&A, 5 mornings a week. I'm there. Often we've only got 2 or 3 or 4 people there, so you would get a lot of personal attention.
And Let me just wrap up with this because we're right at our time limit. Thank you, Nora. So, I do a lot of assumptions, right? At any given point in time, I have 5 or 6 or 7 under contract. And then I've closed, I'm closing a half dozen a month, and, I've done 30 plus or so many in the last, 12, 18 months. There's a lot of misinformation about assumptions. Don't believe in some of the horror stories that you've heard through the grapevine. It takes 6 months to close. I mean, on average, my assumptions are closing in 45 days or less. Every once in a while, it might take 55 or 60 days on the rare occasion, depending on the servicer. But generally speaking, between 40 and 45 days is about the average. So assumptions are about 45 days to close. Buyers don't need to have all the cash, right? They need to work with an agent who understands the process. So all I would say is learn if you're willing to learn how assumptions work. They are a very, very powerful tool and will literally help you potentially double your business in the next 6 months. Because as the economy is what the economy is, interest rates are not going down maybe much further. I mean, we're kind of at the 30-year average for what interest rates are. So unless there's another global pandemic around the corner, which I don't think there's likelihood of that happening, that's going to cause rates to drop back down to 3%. Then really we're going to stick with rates and where they are. 6%, 6.5%. That is the 30-year average. So does it mean that buyers are limited to buying homes? You can help them buy a home today with a 2.5% interest rate, and we provide you with the knowledge and how to do that. So with that said, thank you very much for your time today. We really appreciate it. We look forward to meeting you at the next Q&A Zoom session, Monday through Friday, 8 a.m. Pacific, 11 a.m. Eastern, homes.assumelist.com/learn. We really appreciate it. Thank you very much.